Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So if you watched the Morning Call Express today, we talked about a few different ideas to maybe make us some extra cash flow. Talked about how oil finally had a bid, so maybe we can get some catch up with the XLE. We also mentioned that you had a big move in Amazon into Prime Day and some high beta tech, so maybe they can go from from up to negative, which was cute, decent shorts for some. And then we've been looking at some of these copper plays that were unbelievable. So all in all, lots of things to do, moving and grooving and managing trades. And that's what we want. We want a market that's moving around that you can manage trades. At this point, though, to be honest, with the oscillator plus 80, which is probably the most overbought I've seen it, I don't know, in a long time. I flattened out most of my equities in my active and swing account, and I'm gonna be a little bit more tactical just in case. I don't think people have to do that. If you like the names you're in, because lots of names are all different, just have maybe an indice hedge. And I think that every extension you could probably add to it and just manage it, just in case. So anyway, you look here what I'm talking about. You look at the S&P cash. I got very excited here. Okay, this is when the real money trade was to happen. Okay, what happened? This was your Brexit move. This was your post-Brexit move. So elevated down, elevate up. That wasn't easy. That was hard to call. The one thing that you could have done and measured in order to figure out what's next was right here. Okay, right here you had a 2.5 day pull in. What did it do? It held the 8 day, the 21 day, gave you a red dog reversal around what's it called, the pivot, which was what was that, like 2080. So that was when putting on longs made sense. And then the jobs report came out, hot number. You had probably about a half an hour to buy a lot of stock here to then get above that that trend and this high, and now look where we are. Okay, so you're at 2153. Look where the 8 day is. Look where the 21 day is. Little extended. If we weren't like right near all-time highs or right above it, I'm sorry. I wouldn't have been long even into today because it was like day 4. But I figured once we push through this spot, it's going to get a little bit of follow through just to squeeze as many people as they can. Okay, and at this point though, it looks pretty darn extended. Today during the pull-in, the Qs didn't really make a high. Also, so it's looking a little tired here. You have a doji in the Qs, which typically could mean some type of pause or refresh. Okay, very tight range. Sometimes you get a tight range after a big move, and then you can get some kind of counter trend. And here also, just like most things, this was your red dog reversal, get long. Here was your relative strength add play if you were focusing on it. So now up here, you got to take a little care, in my humble opinion. Even though I do think we could see higher prices and take this out at some point later this year, but short term as an active swing trader, if that's what you are, okay, this type of day, maybe even some people went out short. I was shorted all day, and I was just like, what, I'm just going to cover and start fresh tomorrow besides some options. So you can look at a lot of sectors like that. The small caps and the Qs played catch up, and the spiders are leading the way. But today you could have made some alpha in the XLE. Okay, in the morning call, I'm like, look at oil. Oil has been a laggard. Maybe the XLE finally, since it's tight, plays a little catch up. And this is something, if you're still in it, I know there's an inventories. It just, finally had a little bit of relative strength. Okay, it traded above this little pivot area and held in well, and now it seems as if it's going to be joining the other sector friends above the 2016 highs. Okay, so if this isn't a day 4, day 5, day 6 like the other sectors, this was just hanging around because oil was weak. So you had a big day in oil, so the XLE might be something to focus on the next few sessions. This was great. Yesterday I talked about FCX. I bought it yesterday, added today, broke above this. I probably could have just kept this on also, thinking that it's going to get back to here. But at the end of the day, I was just like, what? Let me just take a little bit off, because in my head I'm like, what? Let me just get flat, because I've been long 4, 5, 6 things since last Wednesday, and now it's Tuesday, and we're about 70 handles higher in the overall market. But this still looks fine. It still looks like it's going to get there. X has been leading the way. This already above the 2016 high. So if it wants to keep leading, the FCX probably could follow. You probably could have something on there. As far as Amazon, it was up $4 or $5 this morning. It's on my note every day. Talked about buying it at 721, 731. Today at 760, I'm like, this is not your day to buy Amazon. I don't care how rock star it could be, and supposedly, numbers were kind of lukewarm. But anyway, didn't fall apart. It just, gave you a trade. That's what we're here to do. We're here to trade, aren't we? And today, this was your inside action. When, remember that Friday, we all had a nice trade when it traded above 721 to make some money. Then here's when it took out the highs of the year. And today, it was down 11 at some point. So if you chased it, I'm sure you didn't hold it. But what did it do? Still held the 8-day. So now this is just going to need a little bit of time, I think, to digest. I took actually off Twitter today. This is the first time I've taken Twitter off in a while. Okay, I've been sitting in Twitter, I feel like, since it, this was that 2-day move when I put the chart on there, and then here's when it took out this one pivot, and then you had your downgrade, and it actually held in pretty well today, and I just was like, you know what, I held through the downgrade, and just wanted to keep with the thesis of taking off equity positions on day 5 of a big rally in the overall market. You look at the spiders here, spiders are up like 1, 2, 3, 4, 5 days. I usually talk about buying a day 1, okay, adding day 2, and then selling some day 3. And if I have it on day 4 and day 5, I'm impressed with holding it. But look at how far away this is extended here from the 8-day. So it'd be nice to see a little inside action, let this thing digest. But obviously it doesn't have to. That's why I'm not short the spiders, because oil could continue, and that would probably push spiders up even more. And why fight it? But I don't need to be long it. And then you had a nice day-and-a-half trade in BABA. We bought BABA yesterday at 80.05, and then I added to it at 82, and it went almost to 83 today. And I'm still in the BABA options, but I was like, you know what? Let me show that trade also. Plus, you have a little bit of a topping tail now. So here was your calculated trade. Here it pushed above this pivot earlier on, went as high as 82.88, and then came kind of off with Amazon, and it also is extended from the 8 and 21 day. Still looks good, but again, you want to pick and choose your spots. Here was a nice bull flag. Maybe buy here, add here, and sell into day 3, or sit and say I'm going to have less and just wait. And if I'm out of it, it may be hard to get back in it. It all depends on where you want to live. The banks also, had a little bit of extra juice today because the TLTs got hit. TLTs gave guys a sell signal yesterday for the first time. Congratulations if you went out short it. First time it actually closed below a prior low and on the lows, and boom, you got paid. Now it's below the 8-day, hasn't been below that in a while, so now you'll see, if it could come in and hit the 21-day, which if you sell strength, you could always buy a dip if it makes sense. Last time it had a little topping tail here, went below the 8 and 21-day. Now it's below the 8, big gap here, and it's the trend. Not say the trend has changed, but when you get extended, just like even the indices, you have to be careful. And now it's back into here, so you'll see whether or not this gap holds, and it could be buyable. Maybe a down open tomorrow could be something to look at for a trade. What did gold do? Gold gave you close on the lows below the 8-day. This has been above the 8-day, showing a lot of momentum, a lot of strength. Okay, and here was your last breakout, and now we closed below the 8-day. So that trend kind of changed a little bit. Doesn't mean game over, but it means take a little care. And people have been waiting for this to happen anyway. They thought gold would sell off on Friday. It was delayed. But anyway, here was your sell-off, and now you'll see whether it comes into the 21-day and holds it or not. I'm sure the GDX also did the same. GDX, how'd you do? Well, look at that. I'm sure a lot of people are probably short this overnight. This makes sense to short it overnight, right? Upper range, closing the lows after a huge move. I would think that if someone put something to my head and said you have to be long or short this overnight, I would be short it. I guess same thing with gold and TLT. I don't know. I might be fighting the guy back. Let's see what else. What else? Facebook. Facebook, was a decent cash flow short this morning. Doesn't mean the move's over, but again, pricing and timing, entries and exits matter. This was, when it woke up and gave a good trade to the long side, then held it, got above this, and coming back into old resistance, I was like, you know what? If they sell off Amazon on sell the news type of thing, maybe, they could sell down Facebook a little bit. So it wasn't a blockbuster trade, but I think we got short at 118.60 first to high, and then it went negative, and that's how you make some money cash flow wise. And now you'll see whether or not it comes into here. Comes into here, maybe we'll be a buyer again. So trading, yes. TWLO, I was in it most of the day, but if I was going to take anything home long, I probably would have taken this home. I still think it looks good. I think it takes out these highs. wasn't enough volume to go yet, but nice wedge. Some intraday action that looks pretty good there. ACIA, how did you do today? Wow, look at that move. That's been been on my notes since we said this was your day to buy it, and then it took this out, and now look, I would be selling that into strength though. It's very extended, but that's why you get to know new issues. So to make a long story short, okay, the market I think is up now 5 days in a row. It's had some powerful days. If you've been long from a swing trading perspective since the Red Dog reversals last Wednesday, doesn't hurt to take some off. If you're a long-term investor, congratulations. You just spent 2 years, getting a nice good cost average, and now you'll see your statements are in better shape. If you've been, in the market for 15 years, you're used to this. You saw the decade of doing nothing that finally broke out above 2013 when we took out, 1560 to go to 2100 the first time. So you know what you're doing. Put money in every single month and continue to stay the course, and don't let the media or the TV sensationalize in why the market's going to be crushed and why you have all these risks about being in the market. And if you're 25, 35, 45, doesn't matter to you. Just keep putting your monthly money in. If you trade, you better be careful. You better know what you're doing. There are times to be heavy long, times to be flattish, and times to have risk down. I'm not saying this is a risk down point because things are great. We're just very, very overbought. I made a promise to myself, like, I don't know, a month or so ago. I said, whenever the oscillator is minus 60 or more, I'm going to be buying the spiders every point down, because we usually get back to zero. And then I also said, if we're ever plus 60 or more, and I know we're overbought, I don't have to be short, but I better be kind of flattish, because at any moment you can get a little bit of a leg sweep, and even if you try and bring risk down, you have 4 or 5 positions, even if it's tier 1 or less, you could lose some money if you get a little bit of a leg sweep. So, oscillator plus 80, I'm going to take a step back, and I'm going to just get back to day trading a little bit more until maybe we work that off a little bit, and we'll see what's next. So have a good night. Hopefully you've been doing well. There's been a lot of great action, and I'll see you at the morning call.